Hello, everyone. Thank you for joining us today. Today, we're going to have the webinar about how to place an options trade. And I'm your host, John Voss. And I know everyone's had a long weekend with President's Day, so we have a short trading week. So I'm guaranteed everything will be exciting during the next 4 trading days. Today, we're going to be executing our expiration week countdown recommendations from Sunday night. And for our purposes, we're going to be using the Schwab platform. Also, for any of our novice traders, please use our chat with any questions that you might have. The whole purpose of the webinar today is to help you gain confidence and understanding to help everyone become a more effective trader. And hopefully, this week we'll have the similar type results that we had back in January for Expiration Week Countdown. Out of our 6 recommendations, 3 of them hit our profit target of 300%. We had another winner at 115% and 2 losers. Now, as we go through the recommendations from Sunday, keep in mind that we would like for you to attempt to allocate a similar dollar amount to each of these recommendations. So let's take a look and see what we have. Let's see here. Okay, there we go. Apologize for the technical difficulties there, but let's see what the trading team gave us. So the first recommendation is for buying a call on AST space mobile. So remember, when we're buying a call, we're anticipating the stock is going to go up over the next couple days. And as it does so, the corresponding value to our call contract will increase. Now, when we go to execute these 6 recommendations today, we are going to be using market orders, provided that the stock is trading within the optimal entry zone. So that is very important to pay attention to. Once we get our order filled, then we're going to go back and place a stop limit order at our profit target of 300%, which is essentially 4 times our cost basis. So remember, when you look at the various variables, all of these recommendations are long options. So we're going to be buying to open the ASTS 31 strike call for February 21st. And we're going to do it at market. So let's go into the Schwab platform to see exactly how that's going to work out for us. So the first thing I do is I go into my platform, I click trade and select all in one trade ticket. So with our ticker, it is ASTS. Select AST space mobile. And remember, for this purpose, we're going to be buying a call. So for our action, we want to select buy to open. And then for simplicity purposes, we're just going to keep it at 1. But remember, you always want to try to allocate a similar dollar amount for each of these positions. Our expiration is February 21st, which it shows on our all of these recommendations are going to be expiring on Friday the 21st. So then our strike, they instructed us, is $31. The 31 strike call, and they gave us an optimal entry zone of anywhere between $31 to $33. Well, let's take a look and see that AST is trading at 31.92. So right there in the middle of the zone, it's considered a viable trade. And it looks like it's going to run us somewhere in the neighborhood around $2, $2.03. So remember, we're going to change our order type with these recommendations to market. And our timing is day. And remember, with market orders, our order is going to fill immediately. And it's going to cost us about $200 per contract. So we would select review order. And we want to confirm, we want to buy to open 1 ASTS February 21st, 31 strike call at market. It's going to run us about $196 per contract, and that we're satisfied, we are going to go ahead and click place order. So let's say, for example, we're filled at $1.96. So then we would go back and place our stop order at 4 times our $1.96, which works out to be, of course, $7.84. So let me show you how to do that on the Schwab platform. Once you confirmed that your order has been filled, go back and put in your symbol of ASTS. There it is. Again, we select our call, and our action this time is going to be sell to close. So we are essentially instructing Schwab that we want to sell to close our position once we achieve our 300% profit target, which is 4 times our cost basis of $1.96. Since we purchased one contract, we're going to keep our quantity consistent and sell our one contract. Our expiration stays the same as February 21st, but we got to make sure our strike stays consistent at $31. So for our order type, we want it to be limit, but the key is we want our limit price to be $7.84. And our timing we want to change till good till canceled, which will automatically default to option expiration on Friday the 21st. So again, we are instructing Schwab to sell to close our February 21st 31 strike call once it achieves its profit target of 300% or $7.84 per contract anytime between now and 4 o'clock Eastern on Friday. Then we will go in and select review order, confirm the information is correct, and then select place order. Now, it won't allow me to place the order simply because I did not enter the position to begin with. So let's take a look at our next recommendation. Our next recommendation is on Celestica. Celestica is ticker CLS. So here they want us to purchase the 131 strike call. And again, we're seeking a 300% profit target. And for this 131 strike call, as with all 6 of our recommendations, expire this upcoming Friday on February 21st. And remember, we need to verify our optimal entry zone, or OEZ, is anywhere between 128 to 135. So let's go in and take a look, folks, and see if this is going to be a viable trade for us. Okay, so we go to trade, and then we select our ticker is CLS, Celestica. And our strategy is call. So we're bullish on CLS here over the next 4 days. Remember, our action to enter is buy to open. 1 contract, February 21st, and they want us to buy the 131 strike call. So choose that from the drop down and make sure that we're within the optimal entry zone of 128 to 135. We're perfect at $130.17. So that will work out well. And we want to change our order type to market. And our timing, of course, is day. And that's not going to be applicable as it's going to fill right away. Now, let's take a look at placing our order, knowing that this position is going to run us in the neighborhood of $3 or $300 per contract. So we would select review order, buy to open 1 CLS, February 21st, 131 strike call at market. It's going to run us $290. And if we're satisfied, select place order. So remember, if we were able to get into our CLS calls at 290, they wanted us to use a 300% profit target. So we would take our 290 times 4 equals $11.60. That is going to serve as our trigger. So let's go back into trade, select our all-in-one trade ticket, and let's put in our profit target. So our symbol, again, is CLS. There's Celestica. Again, we want to choose our call. And our action, remember, we're changing to sell to close. So we want to sell to close our February 21st, 131 strike call. And we're going to instruct Schwab to exit at a limit price of $11.60. Once this call contract hits $11.60, it'll trigger our order and automatically fill. So remember, our timing, we need to change from day till GTC, or good till canceled, which is between now and 4 o'clock on Friday, and then select review order and then place order. Now let's see, Megan has a question on the chat. Why do you recommend stop losses or what do you recommend for stop losses on ones that don't go as expected? I don't see the guidance in the recommendation analysis. So I can tell you, if you take a look at the handbook for the expiration week countdown, for any positions that do not achieve their 300% profit target, the trading team wants us to exit at any point during the trading session on Friday. If you use stop losses, sure, continue to do so. Just keep in mind the trading team would like you to keep everything open until Friday, because a lot of times on Fridays we've been able to enjoy considerable rebounds and be able to turn a significant profit from many of our recommendations. So let's look at our next recommendation. So our next recommendation is for a put. And remember, when we buy a put, we're buying the ability to sell 100 shares of this stock at the predetermined strike price of $97. And keep in mind, with us buying this put, this recommendation, we are expecting the stock to drop. And as the stock price drops, the corresponding value to our put contract will increase. So they say buy the Okada February 21st, 97 strike put as long as the stock is trading between $95 and $100 a share. So let's go into Schwab and see if we can't participate in this position. Okay, so we go back into trade, select our all-in-one trade ticket, and we want to type in our ticker of OKTA, Okada. And remember, our strategy this time is a put. So our action is consistent. We want to buy to open to enter the position. One contract, February 21st, and they want us to purchase the 97 strike put. Oh, and it's running about $1.60. Remember, the stock price is at $96.54, which is perfectly within the optimal entry zone of $95 to $100. So that is a viable trade. And then for the order type, we're going to select market. Timing is day. And this is going to run us in the neighborhood of $1.60 per contract. We're going to select review order, verify that we want to buy to open one Okada, February 21st, 97 strike put at market. So here we're going to go ahead, acknowledge, and place order. So let's go now and place our stop order on Okada at 300%. So let's go in and put in our ticker, OKTA. There we are. And again, we want to select put. And for our stop order, we're going to use the action of sell to close. So this is going to sit in pending status until the value of our put contract hits our target profit of 300%. So we have our February 21st, 97 strike put. We're using $1.60 as our cost basis, 1.60 times 4. Our profit target is $6.40. So then we're going to place our order type as limit, our limit price at $6.40. And our timing is good till canceled. So that'll be nice, especially if we can achieve our profit target of 300% anytime between now and Friday. Obviously, the sooner the better, and take our profits and move on. So here we select review order, sell to close, one Okada, February 21st, 97 strike put at a limit price of 640, anytime between now and February 21st. Good. So let's go take a look at our next recommendation. Well, I'm looking at the 6 recommendations, and it looks like 5 are calls, 1 is a put. Now we're on to PayPal, where we're going to buy the 78 strike call as long as PayPal is trading between $76.80 a share. So let's go into Schwab and take a look. So here we select trade, all-in-one trade ticket, and we put in our symbol of PayPal, PYPL. Make sure to select the proper equity. Our strategy is call, and our action is buy to open. Our quantity is 1 for simplicity. Our expiration for all 6 recommendations is Friday the 21st. And for this recommendation, they want us to buy the strike of $78, which is perfect. So remember, we're buying the ability to purchase 100 shares of PayPal stock at $78 a share when it's trading on the open market right now at $78.36. And hopefully it's going to go up considerably between now and Friday. If we take a look at the bid and the ask, we're looking at $1.07 to $1.09. So let's say we're going to be in the neighborhood of $1.09 as our cost basis. Remember, on the entry on the buy to open, our order type is market. And then we select review order, and let's confirm that we have all the information correct. Buy to open, 1 PayPal, February 21st, 78 strike call at market at $1.08, and then you would select place order. Now, using $1.08 as our cost basis, remember, they want us to verify that our target profit is 300% for PayPal, as with all 6 recommendations. So we're going to go in and select 300%, or 4 times our cost basis of $1.08. Our symbol, PYPL. There's PayPal. Strategy, call. And our action is sell to close. 1 contract, since we bought 1 contract. The 78 strike call at a limit price of 4 times $1.09. You're looking at a profit target somewhere in the neighborhood of $4.36. So let's select our order type as limit price, 4.36. Timing, good till canceled on the exit, and it defaults to Friday, February 21st. So once it goes up to 436, we'll cash out, and $436 will be put back into our cash account. Select review order, verify the information is correct, and then place order. Okay, folks, we have 2 left. I know we're 25 minutes in, but for those of the people that stayed with us, I really appreciate it. Let's take a look at the last 2 and see if we can't make some sense out of this. Ooh, Royal Caribbean. I know that Royal Caribbean and the cruise lines are printing money, it seems like. So here they want us to buy the Royal Caribbean $262.50 call for February 21st. Now, Our optimal entry zone is anywhere between 260 to 265. Let's go in and take a look. In our Schwab platform, we're going to select trade, all in one trade ticket, and our symbol is RCL. There's Royal Caribbean. And our strategy is call. Our action, buy to open, one contract, February 21st, as it is with all the recommendations this week. And our strike price of $262.50. So remember, our optimal entry zone was as long as the stock is trading between 260 to 265, which it is at 262.73. So looking at a bid of 320, ask of 350, our order type, we're going to choose market, timing day. It's going to run us about, it's hovering between 350 to 365. Review order, confirm we want to buy to open, one, Royal Caribbean, February 21st, 262.50 call. And for our purposes, our cost basis is going to be 342.50. So there, we're going to look at, we'll use 342 as our cost basis. We would place order and then confirm order. But now let's go back in and place our stop limit order. So we want to select trade, all in one trade ticket, our ticker of RCL, Royal Caribbean. Our strategy is a call, and our action is sell to close. We're instructing Schwab that we want to close this out at 300% or 4 times our cost basis. So here, our cost basis we're using was $3.42 times 4 is $13.68. So let's tell Schwab we're going to sell to close at a limit price of $13.68. And our timing is good till canceled. Anytime between now and February 21st, we're going to cash out when it hits $1,368. So then select review order and then place order. Okay, so let's see what we have for our last recommendation. Our last recommendation is on Snowflake, and they want us to buy the 187.50 call. So with Snowflake, as you're familiar with it, moves around quite a bit. So very, very volatile stock. Looks good. And now here, our optimal entry zone is 182 to 192. So we have a pretty wide interval there. Let's go take a look on Schwab. And we'll type in our all-in-one trade ticket. And we're going to enter our symbol for Snowflake, which is SNOW. There it is. And again, for this recommendation, we're buying a call. So our action, buy to open, one contract, February 21st, and they want us to buy the 187.50 call, provided the stock is trading between 182 to 192. And right now it's at 192.005. That's good enough for our purposes. So we're going to select order type is market, timing is day, and know it's going to cost us about $620 for this particular call contract. So again, with the more volatile stock, with the higher dollar amount, it's going to move around quite a bit. So with that implied volatility of Snowflake, we have to pay that additional premium. So here, we want to confirm, we want to buy to open one Snowflake, February 21st, 187.50 call at market. So we go to place our order. Oh goodness, we actually placed our order. So let's see in what it actually filled at. So there's our order status. And we see that we actually have a fill price of $5.97. So remember, $5.97 times our 300% profit target. So we have to take our $5.97 times 4, and we're going to set our profit target at $23.88. So let's go in and place our stop order. We're going to go trade, all in one trade ticket. Our symbol again is SNOW, Snowflake. Here's our call, and our action is sell to close, because we're instructing Schwab to sell to close our position and exit it at a 300% profit target. So our quantity remains consistent at 1. Our expiration remains consistent at February 21st. And our strike, we have to keep consistent at 187.50. So again, using our 597 cost basis, we need to set our limit order at $23.88. There we go. And we want to select our timing is good till cancel. So more than likely, our Snowflake calls will achieve the value of $23.88 and trigger our sell to close order, and then we can cash out. So $23.88 will be deposited back into our cash account. So make sure you review order and then confirm the information is correct, and then select place order. There we go. I know that was a lot of information in a short amount of time, but I want to see if anyone has any questions that they would like for me to address. Okay, well, I know there's a lot of folks out there. I just wanted to thank you all for attending today's presentation. Any questions you have, please email us or give us a call. We can be reached at 513-589-3800. Our senior account representatives, as well as members of our customer experience team, would be glad to help you in any way possible. And again, if you need anything from me, please reach out. Otherwise, have a great day and happy trading.